Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic, in a tough year, be bottom up. Last year saw many themes change course. What worked in 2020-21 did not fire as much in 21-22. But somewhere else, investors were still successful finding winners. So, people who look at the same place for winners in every succeeding year are probably not going to find it, because the market's themes keep changing, the focus of investors keep evolving, and opportunities keep emerging from new places. So the investor who is always looking out, who is always being bottom up, will spot those opportunities before the market, and the market is already hungry for opportunities. If you look at the indices, if you look at the benchmarks, let's say in the small cap or the mid cap range, the valuations within the benchmark are not what hungry investors like. They are more within the zone of institutional comfort. Mutual fund managers may be comfortable buying expensive stocks, but individual investors want better. So, these individual investors and probably a few fund managers are always on the lookout for newer opportunities outside of the zone where the institutional guys dominate. So they go out, spot a new team, find a company within that team, play it until it becomes a winner. This cycle is going to repeat more in the current financial year than in the past financial year. With every changing financial year, we are going to see investors who move away from the crowd to spot better opportunities, succeed and do far better than investors who are still staying within the herd and trying to play the game within a narrow universe. So, the only way to broaden our investment universe, spot better opportunities, pick new ideas and then play them is to be intensely bottom up. In 2020-21, after we had the COVID crisis, a top-down trade worked, and you also found great opportunities even playing a top-down trade. You could buy the best of companies because they had fallen very sharply in a short period of time. We don't have that luxury now. Even the war between Russia and Ukraine did not open up that many opportunities, and the best opportunities were only in places where nobody was already willing to go and the valuations had fallen sharply from moderate to extremely attractive levels. So that's a very small subset of stocks. Broadly, where indices are going to guide investing, the valuations are very mature in most areas, and it's very difficult for an investor or a manager to spot top-down opportunities which are going to create outlier returns. So if you really want to create superior investment options for yourself or for your clients, then you need to be more bottom up in the year 22-23. Opportunities will come our way, and investors who are ahead of the curve are going to beat not only benchmarks but also peers. Overall, it promises to be a very interesting year, a year which will sweat it out for investors, and it will also be a year where the challenges to find opportunities are going to rise as the year progresses. It's also going to be a year where inflation returns after a very long gap. Remember, we had rising inflation 10 years ago, and after a decade's gap, we are going to again see inflation rise and challenge our investment hypothesis. So, clearly, our investment thinking has to adapt to inflation, factoring in inflation, and we have to pick themes and ideas which can overcome the impact of inflation in our portfolios. So that's going to be a lot of effort, grind, and we need to master this approach very quickly so that we are early and on the ball before others find it. Thank you very much for watching this video.